It's Jim Check. You're watching Kelowna Now, and we're here to talk about the Bank of Canada rate cut. With me, Aaron Marsh from Rampone-Marsh Mortgages.
Hello.
About time or what?
Big day. Last rate cut we saw was, the pandemic, 2020. So, it's welcome news.
And then when we got the ups, we got drastic ways up, and then I'm sure it's going to be a little bit slower and more painful on the way down, but at least down, right?
At least down. At least they started. They started today with a 0.25 cut. Bank of Canada was very clear in their wording along with the cut that they like where things are going. They like the direction inflation's going. They like the employment data.
Well, we know that the interest rate actually contributes to inflation, so lowering the rate will actually relieve some inflationary pressures.
It will.
Right, so, because, rents and mortgages are based on that stuff too, right? So
absolutely. So, yeah, it's going to be a wait and see. They're going to have another meeting here in July, and then take a pause, and then another meetings in September and October, and then December.
So big gap there, right? So
yeah. So what are they going to do next? I don't know. I think they're giving a little bit of good news today to boost the economy, boost everyone's expectations.
I had said, I think when you and I and Lenny did a show, I think I had said that they were going to do a cut. I believe, because I think the economy is a lot worse than what most people realize. So I think that it was due for a cut. And I think a lot of people are feeling a tremendous pressure on their mortgages.
Yeah,
payment sizes, and then the housing has slowed down quite a bit on purchases and that. And I believe that, that it would be prudent for them to do one more cut in July and then just see where that kind of settles in as we get into September, and then see where that goes. Because I know that the big dog down in the States is, that's kind of what they do is kind of like where we go to, right? Because we can't do too much without them. Otherwise, it'll just really kind of like decrease the value of our dollar and that kind of stuff. So, but I imagine for you guys, customers must be breathing a little bit of sigh of relief.
Well, yeah, especially variable rate holders. If you have any sorts of lines of credit, they float with the Bank of Canada rate. So there's definitely going to be a little reprieve for those types of customers. We're going to see what happens with fixed interest rates. I feel like the fixed interest rates aren't going to move substantially. They've already.
Well, we do have an inverted yield curve, but. I've watched quite a few economists, and they're saying in a year and a half, this thing should settle around 3.
I hope. So, we'll see. It all. It's all.
I believe we'll get down to 3 probably in a year and a half.
Yeah,
and then it'll be a slow, painful drop, not like the dramatic increases up. Just like when we do gas in the Okanagan, right?
Exactly, yeah.
Goes up really fast and just comes down really, really slow, right?
Yeah, and then, that's what everyone has to realize. Yes, it's great news today. They cut 0.25 at last, but you got to be cautiously optimistic. They're not going to drop them as quickly as they came up. I hope you're right that they do a drop next month. Yeah. I don't know. I think it might not.
I think it would be September, a good sign for the economy, especially with that big pause in the middle there. I believe it would be, if you're trying to give some good news to the housing market and to people in general. I think, like they can afford the 0.25 easily. Because everything's a lag effect, right? When they started raising the interest rates, which is, I don't understand when they raised so drastically, because there's a lag even in the stuff they did. Like some of that stuff is still, you're feeling repercussions, the layoffs and all those kind of things that are coming through. And it takes a while, even when they start cutting it, everything lags, right?
Absolutely.
So nothing happens
for sure.
Right?
It's at least a 3-4 month lag before you see results. So,
capital investment has slowed way down in Canada. People don't add jobs, and then the ones they were going to hire, they pause on, and then there's layoffs, right? So.
Yeah, I don't think the government realizes how tough it is for Canadians right now. Affordability, gas, groceries.
If you're living on the edge, like say if you're 2-income family, and your mortgage was, this number better than me, $2,000, and all of a sudden it's $4,000, and you didn't have $2,000 worth of room, and then plus your food went up, your gas went up, your heating went up, and everything went up. There was not the room.
Yeah, and that's really what Canadians have been dealing with for the last year and a half, 2 years.
Yeah, and then people that, like, even when these builds, when like in Kelowna, there's a lot of pre-builds or whatever that people pre-buy 2 years ago.
Yep.
Now they're done, and they qualified 2 years ago, and now maybe they don't qualify.
Yeah.
Right.
Well, and that's where Lenny and I and our team, we've really had to work for creative solutions. We've talked about this.
Because that's tough because they can lose their deposit, right?
episodes.
So somebody put in whatever $60,000-$100,000, and now they don't qualify. What do they do, right?
Yeah. Well, that's where we got to help them find solutions.
Because I do believe that we're going to come back down, and I'm the one that was kind of ringing bells for an inflationary crisis like 3 or 4 years ago, like these policies would lead to high inflation. But I believe we are all now in a deflationary crisis, and that's because technology is going to deflate a lot of the costs going forward, right?
Yeah.
And I think that we're going to see some deflation happening. And so that means they're going to have to ease money policies. They're going to have to loosen it a bit. And so we're going to have to go back down to that 3-0 bound in there somewhere, right? But
yeah, let's hope. As you know, there's the big wheel working that, a lot of Canadians really don't have any control over. And,
Yeah, no, and the people that get punished in this when we went a 19-fold increase from 0.25 to 5, the people that get punished, unprecedented. The people that get punished the worst are not the people. It's not the wealthy. It is the people, middle class, lower class, like the lower end. That's where people, the lower income earners, right, are getting punished the worst because they don't have that buffer, right? So, even talking about the gas taxes, for people that are well off, obviously, it's an irritation, but for people that can't afford their mortgage payment, it's more than an irritation, right?
Well, it's just a double compounding effect. Like then, they're cutting into credit cards and debt to
credit card debt in
things.
Canada is near all-time highs, right?
It is. So, hopefully the government is paying attention to this. They are.
Obviously, yeah.
But these cuts can't come soon enough for the average Canadian.
Yeah, the problem we have in Canada that's kind of unique, though, is that we don't have a big enough housing supply, so lower interest rates may drive the price of the homes higher. They got to increase that home supply while they're dropping rates so that people that have homes can continue to afford the homes and then also be able to new buyers into.
Yeah, well, you've heard it throughout the media, like Canada is in a housing crisis. There is an extreme shortage of supply, and we've got more and more Canadians coming to the country or moving to Kelowna, and the supply just doesn't seem to be there
to keep up with it. That's for sure.
To keep up with it.
There's lots of red tape and stuff. I know that they're trying to do some stuff to alleviate some of that red tape and building housing and that kind of stuff, but not enough, not fast enough.
No.
But again, that pressure down. And then where do you think, like the variable rate obviously comes down immediately, right? Because it comes down 0.25.
Yeah, that comes down immediately. A lot of people's, if you're in an adjustable rate mortgage, your payment's going to come down immediately.
Yeah.
Same with home equity lines of credit. It's going to help with that. But it's like you said, there is a lag. This is.
So what is 0.25 on, say, a $300,000 mortgage?
0.25 on, say, 300,000.
I'm doing a math test for you.
Well, you're getting me right on the spot here, but
how about 500? Is that easier?
Well, I was going to say around $400.
Yeah, so a big number, right, for families?
Yeah,
that's a big number, right? $400. That's like maybe they can afford to eat meat again. Yeah, and I'm not even trying to be joking, but a lot of people I talk to say they can't even afford to eat beef, right? So.
Yeah, it's like we said this whole episode. It's tough for average Canadians right now. So.
Really tough.
I think for right now we need to enjoy the moment. We got to be happy with this interest rate cut. We got to hope for more. But like I said, the Bank of Canada was very clear in their wording. They want to see more data before.
So I'd say we see a ray of sunshine in a dark, cloudy sky.
Well, yeah, we would like to keep it a little bit more optimistic than that. But yeah, that's kind of the way. But There's a lot of buyers in the real estate market sitting on the sidelines.
Yeah.
And I think you need to beat the crowd.
Yeah, be prepared for sure.
Be prepared.
Be
Beat
prepared.
the
Like if
crowd.
you are looking, it always behooves you to actually go out there, have some homes in mind, get pre-approved, do all those things. So when you have to pull the trigger, you're ready to go, and you're not end up in a bidding war or anything, any of that kind of stuff.
Yeah,
And,
yeah. It's really stressful when you get into those types of markets where there's, multiple offers on every property and over ask and no subject conditions. It can be quite stressful. Right now, it's kind of the opportunity where you're able to make competitive offers on homes.
So where should people go right now? Is it into the variable right now and just they kind of ride the wave as it comes down, or is there some fixed stuff that looks attractive out there?
Everybody's different. Every household budget is different. I do like the variable because if you look at it over a 50-year history, the variable has always outperformed fixed, just not the last 3 years. So the variable is very attractive, but it all depends on your risk tolerance. If you're more conservative, then you might want to look at fixed rates, which, you're looking at on variable rates, you're looking at around 6% right now.
Right.
Fixed rates, you're kind of 5 year, you're under 5 year,
4.69
under 5%. So
what do you say to the people that are kind of like that put their deposits down, now their house or their home is ready for possession, now they have to qualify for that mortgage, and maybe their income level doesn't support that increase in cost, because when they were buying, they were probably at the like the rates were probably at 0.5 or 0.25 even, right?
Just be prepared. Talk to a professional. Get in touch with a mortgage broker and see what your options are, and really just focus on the solutions to get that home into your name, and then you can look to sell it or refinance.
Because otherwise you're going to lose that deposit.
You don't want to lose your deposit. You don't want to lose your deposit. You want to do everything in your power to avoid that.
Right.
So, just talk to a professional, and hopefully Rampone-Marsh Mortgages.
There you go. There's the plug.
And find out your solutions.
Yeah. And another way to unite Canadians right now is I'm wearing it.
Yeah. Very popular. Yeah. I'm not an Oilers fan, but I'll be cheering for the Oilers this next couple weeks.
Yeah, it's the first Canadian hope in a long time, right?
Yeah, in a long time.
Yeah,
so,
and we have a local connection with Leon Draisaitl.
Yeah, absolutely.
He played for the Kelowna Rockets. He took them to the Memorial Cup, and they lost, I think, 30 seconds into overtime
away.
Yeah, and then so I'm predicting a Game 7 win, and Draisaitl scores an OT.
Wow.
Hey, Game 7.
Very exciting.
Yeah, because he's got redemption.
Well, I hope you're right. I'm not going to make a prediction.
He's been a beast out there too. So is McDavid.
Oh, they're amazing. They're two of the best in there.
And I've been an Oilers fan for a long time. I grew up in. I think I was 10 years in Edmonton during the heydays of Gretzky.
Yeah.
So I got to see some really good hockey.
Yeah.
That was back then when Gretzky and them would win a cup and the stands would be just like this.
Yeah, it was just
they were so spoiled, right?
Yeah, absolutely
it's
spoiled.
Like, oh yeah,
for sure.
So we only beat them by 10-1.
Well, hey, I hope it goes to Game 7 and then they do win it in overtime.
Yeah. I had to hide this hat for 10 years, 20 years, I think.
Yeah, for sure you did.
So hopefully that happens, and hopefully things are starting to turn around for Canadians with mortgage rates, and hopefully the Oilers can help bring some Canadians together too, because we've had a too divided of a country for too long.
Yeah, for sure. Like I said, let's enjoy the moment, enjoy this interest rate cut, and just hope that the government sees everyone's point of view and helps Canadians out.
And thank you for coming in today.
Absolutely.
And thank you for watching Kelowna Now.